everyone, I'm Gurleen. I hope you're doing well. In today's video, we'll be discussing the trade plan for tomorrow, that is March 24th, 2023 for Nifty and Bank Nifty, and a few select stocks which must be on your watch list. So stay tuned till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. Right before we start, yesterday we had a big event in the US financial markets. We had Fed FOMC meeting outcome, and at least half the market was expecting that the Fed will give some kind of respite to banks which are hugely under pressure because of liquidity concerns, and some of the regional European and US banks are facing bank runs. Signature Valley or Silicon Valley Bank to name a few. Even Credit Suisse got acquired by UBS at a very unfavorable price, and a lot of uncertainty has been there about perpetual bond holders. Now in this scenario, market was expecting that the Fed will give some respite, and even a corner of the market was expecting that the Fed might inject some liquidity and might go for a rate cut, abruptly halting the cycle. Now this in turn would have given some relief to the financial markets as well, but how the market was expecting that the Fed will not deviate from its stated course, otherwise it will give a signal to the market that even Fed is anticipating a bigger problem, maybe a financial meltdown, and it is trying to address that. So market was divided, and yesterday in US the VIX crashed around 13%. So by the time rate decision came, market was more or less settled that the Fed is going to stay course and there will be no negative surprises, and that is what happened. Fed increased the federal rates by 0.25%, and we saw a gap down opening as just before the closing US market saw abrupt selling and Asia was also flat to red. So our market opened 0.3 to 0.4% down, and a lot of people who had shorted yesterday in anticipation of some kind of bad news from the Federal Reserve, they immediately went for short covering. See, you have to understand that the market is generally polarized before such a key data or a key event. So it's not going to open and stay at the same level. So after the opening, we saw an upside tick and Bank Nifty went to the levels of about 40,200. Now why I'm focusing more on Bank Nifty is because the problem itself was related to banks, and banks had corrected even more in the last 1 or 2 weeks. So it has shown greater volatility, and as it was inching higher, the premiums were coming down and volumes were also becoming less and less. Now another highlight is that Hindenburg had tweeted that they are coming with a bigger report, and the last report that they had published was about the Adani Group, and we saw how the Adani stocks went into lower circuit for many days in spite of many investors, insiders and Indians trying to help. Now Hindenburg being Hindenburg, nobody wants to take lightly, and that too on an expiry day. So once the news started flashing on mainstream media and social media, we saw Bank Nifty turning around, and soon after Nifty joined the party. Now those who had sold puts in anticipation of a breakout on the upside and to collect good premium, when they realized that it's more or less not a sustainable breakout, they covered their puts. And just to give you an example, 39,800 put, which was closely trading around 7 or 10 rupees at around 1 or 130, it shot up to the levels of 210 to 215. Now while it happened, the market tumbled down even more, and the sentiment and AD ratio also tossed into the negative side. Now if we move to the charts to take a technical look, so here on the daily chart of Nifty, you can see that the index has registered a shooting star candlestick with a long upper wick, which simply means that the prices were not able to sustain at the higher levels, and Nifty closed at the lows of the day. Also, if you look at this slow upside from the lows, it looks exhaustive in nature, and more or less on a higher degree, Nifty is still trading within this range of 17,200 to 16,800. So what can happen in the last trading session of the week? Let's take a look at the hourly time frame to understand on better terms. Now here you can see that we have a major support pegged at the levels of about 16,800, and we were discussing the possibility of the index spending some time consolidating within this range of 16,800 to 17,200 and then decisively breaking out to catch on to the trend. Now if you remember, we've also been talking since the last videos that this zone of 17,170 to 17,200 is a strong resistance for Nifty, and only if it breaks this resistance, then we would see this harmonic pattern coming into play, and thereafter we can anticipate the continuation of positive momentum on the upside towards the levels of 17,452. Now in this case, the pattern is still valid, but it is not yet active because once again the index failed to sustain above point P and 17,200. So we'll not take any impulsive bets on the upside trade over here as of now. Also today, if you see, the index tested the levels of about 17,200 itself, and once again, we saw selling pressure coming in, and then the index at the lows of the day even below the moving averages. So the takeaway here is that more or less the index has been trading in a sideways range, with the volatility remaining elevated, and a potential downside would open up below the recent low of 16,828, and in that case we can expect the index to test the levels of about 16,650 on the downside initially. Now on the 15-minute chart, we have another harmonic pattern for intraday traders, wherein the breakdown level happens to be around 17,045, and in case this is triggered, we'll be estimating a downside of about 16,960 followed by 16,870 on the 15 minutes time frame. You can consider the levels of about 17,128 or these moving averages as your immediate resistances on the upside. And the invalidation level for this pattern happens to be the high of this high, which is placed at around 17,205.40. On the larger degree, the support level for Nifty is pegged at 16,960 followed by 16,828, and the resistance is placed at 17,170 to 17,200. Now let's move to Bank Nifty. So here on the daily chart of Bank Nifty, you can see that the selling pressure came in from the 20 DEMA, and Bank Nifty has also logged in a long upper wick. Now if we move to the hourly chart, here the harmonic pattern was triggered above the level of 39,597, and you can see that Bank Nifty held above the level and continued the positive momentum on the upside, and today it achieved the target of above 40,200 with a buffer. And as we had discussed in yesterday's video as well, that the maximum possible upside that we were expecting was 40,268, and we said that we can see some cool off from the same, which we did today. And so what is the course of action that we can expect from here? So basically we have seen a massive cool off in the index from the levels of about 40,200 itself, which is about 1% from the highs, which was a harmonic potential reversal zone. And even over here, Bank Nifty also has closed below these moving averages. Now if we move to the hourly chart, here the harmonic pattern was triggered above the level of 39,597, and you can see that Bank Nifty strongly held above this level and continued the momentum towards the estimated target of about 40,268, which it achieved with a buffer at around 40,200 levels, as I also discussed in yesterday's video. So what is the course of action from here on? So we saw a massive cool off in the index of about 1% from the highs, because this was also a potential reversal zone, and even over here Bank Nifty has also closed below the key moving averages. So we'll not really be ruling out the possibility in Bank Nifty for hitting further downside now that the overall sentiment looks weak. And here on the daily chart again, you can see that the maximum downside levels that I'll be expecting would be 38,157 followed by 37,838. Now on the 15 minutes chart, you can see that this topping out structure has also given a breakdown below this pivot of about 39,728, and in this case we'll be expecting Bank Nifty to test the levels of about 39,360 to 39,145, and here you can take the high of 40,202 as an invalidation level, and you can also consider these moving averages pegged at the levels of about 39,905 to 39,910 as the immediate resistances for Bank Nifty. On the larger degree, the support for Bank Nifty is placed around 39,360 followed by 39,145, and the resistance is placed at 39,910 and 40,268. Now let's start with stocks with the update on SUNPHARMA. So yesterday we were discussing that a potential upside of about 984 can be expected over here, and today it has achieved the harmonic target, and we can see that here there are long upper wicks on the upside, wherein simply means that the price was not able to sustain at the higher levels. So because this is also a harmonic potential reversal zone, so we can expect some cool off from here or a probable reversal from the levels, and in that case Pharma can test the levels of about 970 to 65 on the downside, and thereafter we can review it later for seeing that whether the demand picks up from the averages of pivot B or not. Now the update on ICICI Bank is that it has achieved the harmonic target of 864 and has cooled off or reversed from the same, and here I have a short trade running, and that's the beauty of harmonics, that it enables us to catch reversals and not get stuck on the wrong side of the trade. So now you can see that ICICI Bank has almost caught up with the averages here, and one possibility is that it can move in a sideways range as the sentiment itself is weak, and thereafter we shall review it for probable long side opportunities, if any. So on that note, it's Gurleen signing off. Until we meet again, have a good time.